Insurance brokerage, it may not be the best business model, but it's up there.
Today, my guest is the co-managing partner of GCP Capital, Boris Gutin. How are you today, my friend?
I'm doing great. How are you, Al? Nice to see you.
It's a pleasure to have you. I've been very much looking forward to this, and I think people are going to get to really know more about GCP and about the things we've done together and more about Boris Gutin.
Yeah.
So it's a great pleasure.
My pleasure as well. It's always good to talk to you.
So, Boris, we go way back, right? Probably, 15, 16 years at least. We met originally. You were part of a process I ran for NSM. One of the first, real big processes I ran for a broker that was trying to bring in private equity money. I mean, the first one I ever did was back in 2006, believe it or not. It was more of an exclusive with Tannenbaum Harbor and Tesco with Olympus. And, we were involved in that. Walter Harris, a good friend of mine. But really, Jeff McKernan, who we both know well, built a great business and got to know Jeff well. And he hired us. And you were part of that process. You didn't win. You should have, but you didn't. And I got to know you well, and hence, at that time it had to be, 2009 or 10 maybe. So we go back how many years? That might be 16, 17 years.
Yeah, it's funny. I think we met before NSM for like a hot minute, but it was a phone call. Well, we were still investors in Acrisure. So we were investors in Acrisure, and then NSM was like a couple years into that. So I think it was like, that was the first time we met in person. But I remember you're very memorable. So I remember the phone call.
Yeah, no, and that's very possible that we did. But what people don't know, and, obviously we've had a lot of involvement with Acrisure. Greg Williams was one of the first podcasts I did. You're actually the third private equity group that I have on, which, I love to have this perspective too, not just the the CEOs of the brokers themselves and whatnot, but to have your perspective and so on and so forth. So what people don't know is that you were the original money behind Acrisure.
Yeah.
Okay. When he started. And, I think that's something I'd like the folks to know out there, because you got Greg started.
So, yeah. So this was 2009. So you think about that. That's like 16 years ago. We probably were the first, I think, private equity backed platform, because the only thing pre-2009, you have to go back to like Hub, maybe 2007, Goldman Sachs or something. So no one had really cracked the code on private equity and insurance brokerage. And I get this call from this advisor in Chicago who I knew for a while. And she's like, there's this guy out in Lansing, Michigan. He's buying up these little brokerages in the Midwest. He's got really kind of no institutional backing. He's not from the industry, but he seems to be getting some traction. He's bought like 7 or 8 agencies. And I know you guys do insurance, because we had done a bunch of stuff in insurance. We did like the post-Katrina stuff, and we did an insurance, risk-taking insurance business in Texas. And I was like, yeah, sure. I'll talk to anybody. And so I talked to him, and this is pre-Zoom. It was like a phone call. And it was one of those just gut feel things, Alan. You talk about people. It's just like from the call, I said, this guy's got something. I mean, this was no industry experience, right? He didn't come from the insurance space. Basically no capital. So he had convinced like 8 agencies to throw in with him without having any background in the industry and basically no money. And he made the joke when we met. He's like, Boris, I was funding this with friends and family. I ran out of friends and I ran out of family. And I went, I needed to go to you guys for actual institutional capital. And, we met in New York, and it was like 99.9% bet on him. It was just like, okay, business model, we get the business model, we like it. But it was just kind of a bet that he could be someone that could consolidate and convince some more agencies to be part of this. And it was kind of this funny thing, because we had now looking back on it, it was this quaint strategy, called it the Big Ten strategy. We did a circle around all the Big Ten states. And I remember I told Greg, I said, you see these states? These are the only states you can buy agencies in. Like, you don't have the right accent for Texas or New York, you're not for California. This is it. And the reason for that is, back in that day, the concept was you'd buy a hub you develop this Midwest, hub, and then you could sell it to one of the bigger guys. That model changed, then everybody just started buying everything. But at the time, there was like this coherent, let's just focus on one region, build out this, Midwest presence. And then we were, it was a successful investment for us. I look back on it, it was probably the one that got away because we sold too soon. But we ended up selling to Genstar. So we were the guys right before Genstar. And I can say this now because it's 15 years and the other bidder is no longer independent either. But the other bid was Assured. So we hired a banker, not you. We should have hired you, but you and I didn't know each other as well back then. We ran a process, and the last two bidders were Genstar and Assured Partners. And this was like version 1 of Assured Partners. Jim Anderson had just left Brown & Brown. So Acrisure was going to basically be their platform. And I'm at this board meeting in Bermuda because I'm on the board of this insurance company with the GTCR guys who were backing Assured. And we were picking the winner that day. And before I could get a word out, the GTCR guy goes, say no more. I got word. You're not going with us. You're going with this other guy. And, the reality is there was no chance that Greg was going to sell to Assured. I mean, but the reality was that had they given us a blown out bid, it would have been hard. Like we probably would have picked Assured, and then, who knows what would have happened.
It never would have happened, right? It never would. But listen, I think you made a great choice. Greg's very impressive.
Very.
And I could see why you liked him. And look, I met him in the beginning of 13. So, yes, I mean, you had to start somewhere with that strategy. But by that time, when I met him, John Adio, a great friend and mentor of mine, and obviously a very accomplished leader in many of the larger brokers out there, CEO, he called me and said, you got to meet this guy because he's got this model and he's only doing it in 3 states and everyone's calling him up and saying, how can I get in on this?
Right.
And how can he needs capital to go and do this nationally. So it made sense for him to get Genstar because he wanted to keep it going. I don't think Greg would ever survive unless he was the CEO of Assured, because Greg is a true leader and entrepreneur. That being said, very interesting, and that's how it started. And when he got the Genstar money, when that all came together, we did the first deal in 2013, July 1st, with a guy that's still very vivacious here in New Jersey, Gary Taffet. And from there, we really helped Greg get off the ground. I mean, it went from what it was then, it was 38 million in revenue, 10 of EBITDA, and today when we helped him do the management buyout, he was upwards towards 700 million and a couple hundred million of EBITDA. I mean, he ran quick and he created the model, Boris, that really changed the industry as far as the investor community. And obviously, now with Alchemy, which is your insurance platform now, even though you've been involved in a bunch of different ones, it continues to survive and evolve. But great job. And now you and I are not only involved in Alchemy together because we invested this last round when you did the CV, but we're also involved with you on the public adjuster side. Okay, which was something we all got into together, and it's been very interesting to see how that industry is going to evolve because it looks exactly like insurance brokerage, fragmented and whatnot. So we're in that together. So I'm proud to say I'm your partner in both of these things, and I'm sure people would like to hear the other things you've done in insurance brokerage and other things you are doing. But certainly I want you to elaborate on the insurance distribution industry because I know that you have your thoughts around where that's going.
Yeah, no, we as it's very hard to find a platform, right? I mean, the reason that insurance brokerage attracts a lot of private equity money is in part because it's very difficult today with all the consolidation to find a platform that's got scale. And we basically took 7 years after Acrisure to find another platform. And we looked at a bunch, and we ultimately invested in Alchemy, as you mentioned. And Alchemy has been a great success. It was sort of what Acrisure probably could have been had we stayed in Acrisure for more years. And I said, I'm not making that mistake again. So I said, this time we're going to own this thing for a bit longer. And as you mentioned, we did the CV, so we're still in this for many, potentially many more years. But the CEO of Alchemy, Curtis Barden, who you've interviewed and you know extremely well, and you're an investor with us now, so you know the story, and we're partners. But when he came to us, it was a little bit like the Acrisure story. He had no M&A history. It was 7 agencies that he had kind of convinced to merge with his. And the benefit of doing this a long time is I had met Curtis 5 years before that. He tells the story that it was the best meeting they ever had that turned out to be a no. So I met him at his agency, family agency in Orange County, liked him a lot. He had his partner, Anton, liked the strategy, liked the vision. And I called him up afterwards and I said, hey, I like everything about this, except, with all due respect, your family agency doesn't qualify as a platform. It's too small. But let's, keep talking. And if we could figure something out, this and that. Took 5 years, middle of COVID, like mid 2020. He came back. He said he had like 15 term sheets, which I don't doubt, because by then private equity was all over kind of the insurance brokerage space. But, it's a people business. And the fact that, we knew each other for 10 years and that we met 5 years earlier and kept in touch. I think that was 80% of it. The other part of it was he joked that the reason he picked us was that like 11:30 at night, I'm coming home from this restaurant in Montclair, New Jersey. That, you hate going there because there's no parking. And I'm walking.
You're right.
I'm walking up with my wife and I see my phone. It's 11:30 at night and Curtis is calling. And he's on California time, so he doesn't. And I dropped a little bit, so I probably maybe I shouldn't answer the phone. But I said, I'll answer the phone. So I called, and the next hour and a half, 2 hours, we were talking about everything. What about this? What if we change our strategy? How do you feel about this? About kids, politics, whatever. And afterwards, he said, that's the reason we went with GCP, is that I just felt like, this was going to work, that you understood how and we're hands-on. This isn't about you're going to, leave me alone. It was more that this is the kind of partnership I'm looking for, and, it worked out. We've been in it for 5 years. We, as you mentioned, did the continuation vehicle, in large part because we've not done a continuation vehicle on anything else that we've invested in up until now, because I haven't really felt that we had a business that was worthy of it, to be honest with you. A lot of these continuation vehicles, they're sort of designed to be very attractive to the general partner. That's just the way they're set up. But the worst thing you can do is put a business in there that doesn't have as much upside as it's had historically. And then that'll be like the last continuation vehicle you do. So we just haven't found enough. There's a couple other businesses we have that we think could fit it. But Alchemy was the perfect one, because if you talk to Curtis, and I believe this, I think we're in the second or third inning. There's still a lot of upside. We're million, any other business with 300 million in revenue, you'd say that's a big business. In insurance brokerage, it's still kind of small business.
Well, you called me about Alchemy, and I think my partner Ray had talked to Anton and Curtis early on, and it was just they just didn't have enough meat on the bones at that time. And you called, and obviously you and I have had a fantastic friendship and relationship, and said, "Hey, I'm behind this thing. It's about 60 million in revenue at the time. This probably goes back about 2.25 years ago. That's it. Not that long ago." And I said, sure, everybody wants to be in our processes. We have a lot of inventory. We got a lot of things in the market. Obviously, we just closed a really nice deal today with Alchemy, a really, really good sized agency, and done a lot. But you called me and said, hey, what do you think? And, I reacquainted. I really might have talked to them once and then reacquainted and got to know Curtis. Orange County, California, different mindset a little bit out there than the New York mentality that we have. And, Curtis was different. Curtis was a guy that I thought right off the bat, like you said, the important thing to him was going to be the people, and that, he had a mesh. So we instantly connected. Basically, then we started, getting involved in the processes. And between our sell side advisory firm and our financial diligence firm, we've been involved in about 28 transactions with Alchemy since that 2.5 year ago position, and really helped them go from 60 million to over 300 million to where they are today, a coast to coast company, not just the West Coast company where we started. And that, that gave us the opportunity to work closer together, you and I. And then when it was time to get more capital, it made perfect sense based on where you were, where they were, a lot of other factors into it, that the CV route made sense. And I think that was a very good move for you. And, certainly now we got runway. And I do believe it, I wouldn't even say the third inning, Boris. I say you're just touching the top of the second. Because there's a lot of runway here for this business, and we're happy to be involved. And we'll continue to get them involved in our deals. And I'm sure Curtis, who does an excellent job and is a terrific guy, will win his share of them. But it's been a good run, and it's great that we're back together again here on this. And now we throw in the public adjuster piece that we're exploring together and starting to build with GAVNet, the platform in Minnesota that we found you, I'm not sure you were even looking for that industry at the time, but, I enlightened you on it, saw why I liked it, because it's wide open canvas, like insurance brokerage was, and together, we can make a mark there. So, maybe speak to a little bit about, where you see Alchemy going, the future of, I think, like you said, we're several years down the road from another event. But I think we'll have a real successful one, and they're probably still one of the ones that could, be able to, at that time, depending on the marketplace, be able to take another sponsor in without having to try to sell to us for strategic or whatnot. I don't think that's in the cards. Curtis's personality, he's a very strong leader, and I think he's very good at what he does. But talk a little bit about where you see Alchemy going, and I'm happy to, if you want to touch a little bit on GAVNet, but really want you to focus on the insurance brokerage space today.
Yeah, no, I agree. I mean, I said third inning could be first inning. I mean, I think the truth is that Curtis in general is we've done about 80 investments over the years at GCP. We're 25 years old. We, invested $2 billion roughly. And I put Curtis top 1-2% of entrepreneurs we back. I mean, he is incredibly driven. He's on a mission. He's got a vision. He's got a lot of gas in the tank left. He's just a unique guy. And you remember, Alchemy was kind of like two people. When we backed it, the C-suite was like two people. And so everything that's been created since then, the entire kind of infrastructure, they have an office in Utah that's growing. It's actually gotten so big, we need a new space. All of that was ground floor. I mean, all of that was built, and he and the team has really built that. And it almost feels like we haven't even really utilized it yet. I mean, we kind of were just head down, making acquisitions, learning how to do M&A, learning how to integrate, and all of the efficiencies that coming out of it haven't really even started. That was part of the thought process of the CV, which was like, listen, like the first phase of this has been done and been proven, but the next phase hasn't even really started. And what I like about Alchemy is, I mean, the industry kind of shifted back in the day when we did Acrisure. It was all kind of, hands off, your name's on the door. It's kind of mass powered by model. There wasn't this, like, everybody's using the word integration, but people weren't talking about integration 10, 15 years ago. And the thing we liked about Alchemy is because he's an operator, we were talking about integration like day one. I mean, if you're integrating when you've done 200 deals, that's a nightmare. We've done 80 acquisitions, and we started integrating from day one. That's much more doable. You're doing it kind of gradually. And most people, when they say integration, like they use it in a sentence, but they have no idea what it really means. And I'm not even sure exactly what it means, because people use it for different things. But for me, what it's meant for Alchemy, it's all about data. I mean, most of the time when I talk to Curtis, we're talking about what he's doing with the data, how it's getting centralized, how a lot of the administrative stuff is being moved more and more to Utah. And because we've got great data where we can figure out, okay, we got a client, what's our wallet share? What are we placing with them? Why are we placing benefits if we're doing commercial, vice versa? So you can see wallet share by customer, everything is centralized. And for a lot of the small accounts, you can start moving those to Utah. And what that means is you're basically freeing up the producer to go after bigger accounts. And even if you lose a couple small things, if you're able to land one larger account that's 10x the small stuff, that more than makes up for it. And you couldn't do that if you don't have good data, because if you start peeling away clients from these agencies, what they're going to say. Like, what are you doing? And here, because we've got the data, because we've got the administration in Utah, you're able to do that and show them that, you're actually going to be able to grow your agency even more if you take all the sort of smaller clients away from you.
I think also what you've done well, you've done well with Alchemy, and it's an all-in team effort here. I mean, despite you're the money behind it, you're influential to him, and he's got a lot of respect for you, or as you do him, and obviously as I do. But the big two buzzwords are not only integration but organic growth, and I think the organic growth has really worked there too. They got a very, very strong organic. I think it's low double digits, if I'm not mistaken, and that's a testament to the fact that you did start to do things right from the get-go organically, because any new investor, if it ever comes to that, wants to see that it's working. All the acquisitions, the 80 acquisitions, is coming together. It's integrated. It's creating cross-sell, because all these people have different verticals. And look, I could just tell you the things we've put in there and the quality firms we put in there, like I said, to really, really help them build the East Coast more than anything. We've done stuff on the West Coast and Midwest and everything else, but I think that's a testament to the fact that, you were able to direct him in that fashion, and you both were on the same page from day one.
I agreed. And it's kind of funny. I happen with a lot of our CEOs, organic growth in general, putting aside of just insurance brokerage, that's often like the hardest thing for any company to be able to really crack the code on, is how do you generate double-digit organic growth, often industries that are not growing at a double digit, right? I mean, insurance brokerage, other than the hard market cycle, doesn't really grow at 10%. Like last I checked, it's kind of a mid-single digit type of growth business.
Right.
And with Curtis, he's always like, "Oh, that's easy." Like, what do you mean that's easy? Well, that's what I've done my whole career. I mean, I've run books of business. I've motivated salespeople. In some ways, he felt like the organic growth piece is the easier piece, and some of the data administration integration is where a lot of the harder work has been. But you really see that. Where you're going to see that, Al, is going to be if we get into kind of a little bit of a softer market. That's when you get which guys really have the systems and the processes and the organic growth engine, and which guys were growing at 7-8% because premiums were growing at 7-8%. And we're getting a little bit of softness now. I mean, like property is a little soft. Casualty seems to be okay, but you could have a period of a little bit softer growth. But the insurance brokerage is all relative. In other industries, when you say softness, it's you're going to be down 10-15%, then you're trying to cut costs. Insurance, it's a narrower band of, if you have a couple of weak years, it's not like you're going to be down 10%.
Well, they got the residuals. The residuals are everything. That's the love of people like you, of this industry. It's the darling of investors. It's high margin, residual. You need the product. Most of the products by law. I've said it on every one of these podcasts. I've been fortunate enough to pick this industry, and I picked it by chance because, when I got out of college, I didn't know what I was going to do. And basically I went to Liberty Mutual, and here I was, and that's how I got exposed to insurance. I never knew the broker side till I left Liberty Mutual and started to do an executive search. And here I am talking to got brokers all over the place. And, next thing I know, I'm doing M&A, and here we are, but, I'm dealing with guys like you. I'm investing with you, and, it's been a great run. But I got to say that, insurance brokerage has done me very well. It's done you very well. And anyone that's gotten involved with it, it's hard to screw up because of the residuals. Even the B and C players can really do well in insurance brokers. That's why it's like recession proof, and it's been unbelievable. So Boris, Alchemy is cranking. It's a very good company. You got great leadership there. I think together, all of us together will agree that, the next stop on the train will be down the road, and it should be a very, very good one for all the shareholders, et cetera. How do you see the competition for Alchemy right now in insurance brokerage, and from a private equity perspective? Some bigger deals that kind of went towards the publics, right? They got to a certain size where that optionality they all talk about wasn't really optionality. There wasn't many options, okay? Because if you're not prepared to go public right away, which is hard to do, or you're too big of a business that you can't do it with one sponsor. Now you got to have multiple sponsors, et cetera, et cetera. that kind of, I think, got a little blindsided that their option was to sell to a public company or whatnot. So you learn from that. But how do you see the traction or the trajectory or the game plan for Alchemy? There's no obviously, a black box or anything, but how do you see it? And how do you see the brokerage, insurance brokerage sector for private equity, the interest level? Because some people thought that might have weaned because certain firms like Risk Strategies and Assured maybe didn't go exactly the route they planned on. How do you see it? And how do you see Alchemy fit in? And how do you see it in general from your perspective, your level of interest as a private equity?
As you said, it starts with the business model. I mean, insurance brokerage, it may not be like the best business model in the world, but it's up there in terms of just hard to find a business that's got 90% recurring revenue, very little CapEx, pretty recession resistant. It doesn't have the growth of some of the high-flying tech companies, but it doesn't have the risk either. And so generally speaking, business model always is kind of where you start in private equity. So if you find a business that has those kind of attributes, it's really, really hard to find another one that's, that you're going to be confident you're going to find something that's better than that. Someone told me a while ago when we made the investment in Acrisure, I talked to one of the old-time private equity guys. I don't know if he was like KKR or Blackstone. And he's saying, great, you just bought an insurance broker. Now, never sell it. I was like, well, we got to sell it eventually. But that was a little bit of the mindset. It's like, listen, you might never, like, if you weren't running a fund, you almost never want to sell it. But in general, private equity has gone to it because of the business model. But the other reason I think a lot of private equity has gravitated towards it is that for the very big funds, it's difficult to deploy a large amount of capital into a business and still create a good incremental return on capital. If you think about we're a smaller fund. I mean, we're happy to write 10, 20, $30 million checks. But if you're one of the mega funds, you got to write 100, 200, $500 million checks. Well, good luck finding a lot of industries where you're going to deploy that much capital and still feel like you're getting the return on capital that you want. And insurance broker, one of the few where you can, for lack of a better word, shove a lot of capital towards it and still get a pretty good return on incremental capital, which is why the big funds have always liked it. It's almost like you need it in your portfolio because where else are you going to put your money? So that's why I always think there's always been a good sort of fundamental bid for insurance brokers. But you're right in that most guys have now figured out that once you get to a certain size, it's easy to triple your EBITDA if you're going from 100 to 300, 300 to 600. But if you're like thinking $1 billion to $3 billion, that becomes really hard, almost impossible. So that's where the IPO route has come in as a potential exit. For us, I mean, look, we're $300 million in revenue. If we doubled in size, we'd still be kind of on the smaller end, frankly. I mean, you wouldn't say if you're 500, 600 million in revenue, that would be a very large platform that you couldn't double again. So I do think Alchemy's got at least one other bite at the apple before you start saying, hey, this is the only exit an IPO. And by the way, it's not the end of the world if you exit the IPO. I mean, you have to put the processes and controls in place that you're IPO ready. But the IPO exit's not a bad option. And I happen to think that some of the larger platforms, like maybe an Acrisure, they're going to go public and they're going to need to buy some bigger things, because these small acquisitions don't move the needle as much. I mean, you saw that Gallagher and Assured. To me, the IPO exit is not that's not a negative. That's actually now potentially a positive that more and more of these larger platforms are going to go public. They have a public currency and they'll continue to be buyers. And ultimately, maybe, down the road, not the near future, but down the road, Alchemy could be acquired by one of the larger consolidators.
Or go public, right? Down the road. Because you're right. You're right.
Yeah.
And what you said is accurate because it started in 2020-ish or maybe even a little before, where if you have a good asset, it's so hard to find a good asset. And really, these assets, it's not just a business and a scale, it's the leadership. It's having you're really backing people, right? I love these private equities that call me and say, well, we have the executives in place to bring in to run it. I said, okay, so you want someone who's got a large enough scale business for you to invest in and they built it to that level, and you're going to come in with someone who doesn't know the business because they told you they're an executive from one of the big firms or something. Most of those people are looking for jobs, by the way. That's what they're trying, and they're selling, guys like you may be smarter than a lot of them, and not to buy into it, that they can build this company, yet they've never done it. And we're going to put someone in. You have to back the people that are there. If you don't have a good leader and don't have the scale and an acquisition track record too, right? Like you said, despite the fact that Curtis didn't have a real acquisition track record, Curtis knew how to put together 6 or 7 firms from a cluster and get 25 million of revenue and go to you and say, hey, back us, and so on and so forth. He had that ability, which was good to do. And you could see clearly he's a clear leader. But I agree with you. I think, it's everything's cyclical. So people say, well, what do you think is going to happen 5 years from now? I have no idea, other than I'll be 69, okay? And hopefully I'll still be cranking it pretty good here, which I plan on doing. I don't know. I didn't expect some of the things that happened with them, but even Boris, I think it's even a lower threshold than 300 to 600 million EBITDA. I think at 300 million, you got to start thinking about, what your real options are, how you're going to be looked at, because that's really kind of what people are kicking around now. And there's several of the people that we're involved with that are right at that 250, 280, 300 mark that really have to decide what they're going to do. And the options are much more limited than it was just, hey, look, you keep flipping this every 3 to 5 years, you'll triple and quadruple your money. And, maybe when you get into the multi-billions, you have to worry about going public or selling it to strategic and so on and so forth. I think that's changed for now, but 5 years ago, it could change again. And I think a lot of that has to do with the environment, with the interest rates, et cetera, that kind of made people a little bit more select. And I do think that there's been at the higher level, private investor, kind of a little bit of a reset of the values. That's what we're seeing. That happened now with two. Is it going to happen with everyone? Everyone's going to learn from it, hopefully. Certainly we do, who are out there trying to do things for guys like you and Alchemy. So I think you're accurate in that. Obviously you still have a strong interest, in insurance brokerage. I don't think that'll ever wean. I think people just that, obviously didn't get exactly what they wanted, thought that there was a lack of interest. I don't see that at all. I just think it's a little bit of a reset at certain levels because we're getting tremendous value still for the selling community. The most of the people are, 10 million of EBITDA and under, the bulk of it, what's out there. And we're still getting great values for it. But what we've seen is a much more selective approach that, 2-3 years ago, if you had 10 people participate, you'd probably get 9 or 10 offers because the interest rates are low. Now people are a little more select than what they bid on. Maybe you get half because they're select with their cash. So, the one thing that Curtis has done really, really well is not only he has, kept himself in the M&A, which is brilliant because, it's a big, big statement when the CEO comes to the party initially and meets the people he's going to bring in, which makes all the sense in the world. But a lot of them did it early on and then they faded away because they got too big. I told them the one thing I could tell you is never get out of it. Never get out of it because that's a very important thing. But he's done a great job in competing and winning a lot of these transactions. And he's not overpaying. He's paying what's market. We let the market speak. But he's winning based on your strategy, where you are sit in the market, and himself. He's doing a really good job. So, you got a great asset there and a great leader. And I'm glad to be part of it all. And, we'll do our part too.
No, it's been an incredible partnership. And I was going to say, when you said people, I remember that after Curtis had picked us, then I was like, oh crap, now I got to figure out, do we actually want to do this deal, right? Because it was kind of like, there's the mating game first. And I was 80% of the way there. But the first phone call I made was to Greg, called Greg Williams. And I said, hey, I'm not going to mention the name of the company. We're looking at this thing in California. I just want to know, are we crazy to try to do this again? Of course, Greg said, look, the industry still as attractive as it was before. It's still as fragmented as it was before. It's actually even more fragmented. I said, he gave me two pieces of advice. He said, one, make sure the whole co costs don't get out of control. Is that all these guys like to add tons and tons of people at the holding company, tons of accountants, tons of IT, this and that. Make sure you keep that under wraps. I said, got it. Good news. We have two employees right now at the holding company. So we have no whole co costs. Great. That's good. The thing he said is the only platforms that haven't worked, and there really haven't been ones that haven't, when I say haven't worked, like where people lost money, there's been ones that kind of moved sideways, as you know. It's 99% about the personality of the guy running it. Because if you can't convince, and to your point, you got to stay in the M&A process. Greg, even as they got bigger and bigger, I mean, Greg was still on the front end. I mean, he wasn't on every single deal to the very end, but he was involved in like mostly all of them.
Probably till about 500 million. I'd say that Greg was still involved till about 500 million because we were there with him. We helped probably we influenced a lot of the first 300 million. I put over 100 of our clients in Acrisure over the years. And like, once again, it's their choice. Even though we're invested in some of these things like Alchemy, it's their choice. We lay up the dominoes. In fact, many of our investments compete against each other in our processes. All right. That's kind of how we've evolved, as where we are able to do that and get people into these processes. But yeah, I think it's critical that if you're bringing the people in, this is all about people. You want to know the people that are coming in. And if you're on the front line of that, that makes all the sense in the world. And believe me, that makes a big difference. And as many people as I tell that they should stay in it, they all say yes, and a lot of them faded. I don't think he will. I think that's a big attribute for him.
Yeah, that's true in our business too, Al. I mean, I think I'm the co-managing partner of the fund now. I've been there for 23 years. I've been doing this for 25 years. A lot of firms, over time, the senior leader starts to kind of let the mid-level guys kind of run with the deal and then sort of shows up at the end to say why he doesn't like it. That kind of a thing. That never ends well, right? I mean, that we've tried to avoid that. I try to be involved in everything because I view this as a marathon. I mean, we gotta, if it doesn't work between the specific individuals, and if I'm the one that's leading it, it's just not going to work. You can't just kind of let the other go with it. Now you got to go to a scalable model if you don't let other people, run and get things to kind of the 10-yard line, but you got to be as involved as you can all the way through and be really the person that interacts with the entrepreneur. So I take that. And I think I said that story I told you about us talking in the middle of the night in Montclair, New Jersey, was a lot of that. Like Curtis was testing me to see, hey, if I call Boris at like 1:00 in the morning with an issue, is he gonna pick up the phone? Unfortunately, he does that all the time. So my wife is yelling at me.
Yeah, because it's 10 o'clock out there. He does it to me too, so don't feel bad. All right.
Right. He's calling me and he's like, "Who are you talking to?" I said, "Curtis." Oh, okay, all right. And the thing you had mentioned other businesses that we've gotten involved in with you. The one thing I always liked about you, this is gratuitous. You didn't ask me to compliment you, but I will, is you're very good at not only just, figuring out people. You're the best read of people that I've met in terms of in your business, being able to quickly assess, okay, this person's like this and this person's like that. And you're very, very quick with that. You're very precise with it. But you're also great in often telling us that we shouldn't do something. I mean, that you never hear that. I mean, some situations where you called and said, listen, I got this thing. I'm not sure it really makes sense for you. I'll be there. I'll help, we'll help, but I'm not sure it's really for you. That like never happens with other investment bankers. It's all about the fee. Oh, here's the 25 reasons why you should do it. You're giving us, I think, very much the straight view on what you think about something. And you'll say, listen, you might want to do it. I'll help you with it, but I'm not sure it makes sense for you. And that you don't hear that from other people. I mean, I've been doing this for a long time. You almost never hear that.
Well, I appreciate that. And I think, you, like I've always said, when you're young and you're early on, you're hungry and you might be more trying to convince people. I don't convince people of anything. What I've done is we lay out the dominoes. We go to the people that we feel is the best fits for everything. And, what people don't know, we're just not doing a bunch of insurance deals. We're heavily involved in private equity and we're pro private equity. And, some of the best relationships I have come out of private equity over the last 15, 16, 17-year period when really things really started to move. And like I said, really, I hired my first a person to do the backroom work is when we got an M&A in 2000. That person happens to be the CEO of World Insurance, Rich Ignoyan, a great friend of mine. And look, he's sitting on top of a $750 million Goldman Sachs-backed national broker now. I'm very proud of Rich. He's done a great job. But I really evolved, as someone who just was a bird dog that was out there hustling and hustling and hustling. And I never tried to sell something. I've never tried to push water up a hill because to me, you just get wet, right? So everything I tried to do, I've tried to be ahead of the curve with everyone and know when I had something based on what people would like. And look, coming to you with a public adjuster, you don't know, but you definitely had the profile of the kind of business that you might like, the size and all that stuff. So it made sense to always ask you. But look, the one thing I think people would love to hear, in this conversation for us is a little bit more GCP. Yeah, you're absolutely, been done great in insurance brokerage. We're now together in this public adjusting. What other sectors have you played in, and what other things do you look for?
Yeah, so we, as I said, we've been around for 25 years. We've made about 80 investments. Insurance has been one leg of the stool, but actually it's not even been the majority of what we've done. We've, particularly the last, I'd say 12 to 15 years, we've been heavily involved in fintech. So a lot of payments, credit card processing. We have a pretty big investment in the cross-border payments business. So we like kind of payments, generally speaking. We were early investors in something called Heartland Payment Systems, which went public, was a very successful merchant acquiring credit card processor. We were involved in it. I was heavily involved in something called TransFast, which was a cross-border payments. It was basically remittances for immigrants. Back when, that wasn't the sexiest of industries, but we were able to expand it into Asia, and we took it outside the U.S. and we ended up selling it to MasterCard, which was kind of like no one thought you'd sell a money transfer remittance business to MasterCard, but because we grew the Asia business, we attracted somebody like MasterCard. And that was a big successful investment for us. So we like payments. And the third leg, I would really call it kind of business services. So like a public adjuster, it's insurance, but it's really a business service. Insurance brokerage is kind of business service on some level, right? You're not taking risk. But we also do other business services. We have a class action bankruptcy administration business, which is kind of legal process outsourcing. We have a digital marketing, long-time investment. So we like kind of business services, financial services, payments, insurance kind of falls within that. But we're fundamentally what I would call ourselves is we're growth, lower middle market investors. In other words, you're not going to find us, buying some, small manufacturing company, little retailer or, consumer products business, but we're willing to write smaller checks and take a bet off on the business before people quite see it. Like they like to say it's before they're ready for prime time. And we'll take the operating risk. I mean, Alchemy, we took the bet on the person. We took the operating risk. Acrisure, we took a bet on the person. We took the operating risk. When it works, it can be, it's a home run. When it doesn't work, it's often because the team we just couldn't get enough build out and support of the team to be able to scale the business. Usually, you
didn't pick the right person, Morris. It comes down to the right leader. That's what I'm saying. It doesn't matter what the business is. It's people by people. If you have the right leader, you're backing that person. You're not backing the business. You're backing the person who has the business. And once you lose sight of that, you don't really know if you're going to succeed or not succeed. You may love the business, but if you don't have the leader and bringing someone in, I'm not for that because, now you got a bunch of people that are saying, well, what's going to happen to Joe? Joe is running this. Now this guy's coming in. What does he have? What does he know? They'll worry about their jobs. It's really seamless if you back somebody, invest in them, keep it running, keep it going, and create an opportunity for people and the leadership to expand it. And I think you've done a great job to that. And listen, you are clearly a go-to guy for Sika Fletcher, I'm not going to say the lower end investments, but where you play and how low you'll go to invest in a certain check size or EBITDA size and whatnot. You're clearly one of the go-tos for us and one of the best that I've seen. And that's why we come to you. And look, we have others that have fit that category as well. And they've done some podcasts with me as well. And they've been great advocates. But you're right at the top of the list, Boris, with all the top PEs. And believe me, Boris, there's nobody that gets more PE people calling me than I do. I have, a dozen a week, with the calls or emails out. Can we do this? We'll do that. We do this. And I try to field all of them and try to be respectful to all of them. But I stay with where my bread's buttered and where we've been successful. And you've been a big part of that.
Appreciate that. And we're the same way. We're kind of old school in that regard. We don't have a ton of relationships, but the ones we do, we're loyal. They're deep. Goldman Sachs knows us more stuff, but we're not their first call. I mean, we're too small. And we rely on deep relationships with a small group of people like yourselves, and we do a lot with them. That's the business model you need to have in our space.
No, and you do it well. And, I enjoy the friendship that we've built. And, look, I'm 64 years old. I'm still going strong, though, buddy. I'm not going anywhere. But, as you get to this point in your career, you reflect on all the great people and the people that are important to you. And you've been a very important person to me for the last, 15, 16, 17 years in the things we've done together and still doing together. I can't tell you enough how much I appreciate you taking the time today to do this with me. I think pretty much I've covered everything that I have, unless you have anything else that you want to dive into here. I think this was fantastic, and you did a wonderful job, and I really appreciate you being on today.
No, thank you. It's always great to talk to you. And we gotta grab another drink or dinner in New Jersey. I know I gotta go to northern New Jersey for you, but I'm happy to do it anytime.
Well, that's where the better spots are anyway, so it's all good.
All right.
Great to see you, buddy. Let's keep rolling. Thanks again.
For more information about your unique situation, please contact Sika Fletcher or visit us at www.sikafletcher.com. All opinions expressed by the host and guests are their own and are not necessarily those of Sika Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sika Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sika Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others.